We've seen quite a strong performance coming through in most of your divisions, with the exception of a few. Revenue up 16%. Take us over the period that was.
I think we've had a good 6 months. The most difficult part of the business for us has been in our chemicals division, where the strong rand has really impacted on manufacturing across South Africa. It's been difficult for our customers to face import pressure and as well as to export. So I think that's been an area where our business has been affected in terms of volumes. But we've embarked on quite a nice cost reduction program, and the margins are up from the prior period.
With regards to the revenue, we saw it increasing around 16%. Looking at agriculture and also the mining industry, and that's where we actually saw quite a bit of strength. Let's delve into the mining sector. Quite a lot of strong demand that we've seen in the sub-Saharan African region. Do you see that maintaining this momentum that we've seen over the past 6 months?
Oh, absolutely. I think that mining's onto a good patch. There's many new mines developing in Southern Africa, if not across the African continent. A lot of prospects for gold, platinum, coal. We all know about the resources in Mozambique and coal, uranium resources in Namibia. So I think that the mining story is going to remain positive for quite some time.
We saw revenue within the sector increasing by 27%. We did see the operating margin reduced from 15.9% to around 13.6%. Any chance that we could actually get it back to the number that was previously, and is that sort of the best performance, around 16% handle, that you'll get within this division?
Look, I think that that's probably on the higher side, but yes, I would expect the operating margin to improve on this 6-month period. We had an incident in one of our plants at the beginning of the period. The plant is back on stream, and as a result we did lose some income from that particular operation.
18 million rand is the loss.
That's quite correct, and it will be on an insurance claim as well, so we would get partially at least some of that money back. But the plant is back in operation, and we would expect a much more normalised second half.
We're also seeing quite interesting products that you've actually started implementing. Tell us a little bit more about the new generation of electronic detonators that you actually started to implement, and the demand that we've seen over the period.
Yeah, look, that's a product we've had for some time in our stable, and we're continuously improving on the R&D. And I think the current product that we have now is really a fantastic product. Its functionality is fantastic, and we can see that in the market, and that the market is now starting to accept the product. And really what it does for our customers is it improves quite considerably their cost base in enabling them to conduct their mining operations in a way which will save money.
With regards to the nitric asset complex, of course we saw quite a bit of investment, heavy investment going through there, and of course we're still waiting for, and you're still on target actually, to start operations in 2012. How's this going to change the business going forward?
Well, I think it's a game changer for us. I mean, that's why you saw the earnings per share go up 2% rather than the 38% increase in the bottom line. And it's because of the number of additional shares that have been issued, and of course we have not seen the benefit of that additional equity come through into the business, in that we're currently in the construction period. So once that plant is constructed, which we expect at the end of the first quarter of the calendar year next year, the plant will then start to generate revenues, and that will be a game changer for us.
With regards to the actual impact that we're going to see going forward, and as you said, we saw a little bit of a depressed number on the earnings per share because of the fact that we've actually seen quite extensive capital investment within the nitric asset complex. The impact on the actual earnings, when do you expect a significant upside going forward?
Well, I think that will certainly start in the next financial year. So during this year we really are in the construction phase, and it will only benefit us in the forthcoming year, which starts in April next year.
Within the agriculture division, you're also seeing very promising scenarios playing out, and of course this is a very integral period that we actually see at this point in time.
Yes, no, I think again that space is exceptionally bullish. There's good prospects for all farmers in terms of the price signals they're getting from their markets. The maize price today is probably double what it was a year ago. So we are expecting farmers to plant a lot higher hectareage this year, and the application rates for fertilizer will be increased over the past year.
With regards to carbon credits, I find it quite fascinating that you've spoken of the significant drop in global carbon credit prices, and this of course is impacting the revenue that you've actually been receiving. Give us an indication of the revenues that you've received in the past and what you expect to receive going forward.
Well, last year we in fact did not sell any of them due to a glitch in the...
2 years of CRs available at this point.
That is correct. In the prior year we in fact sold some 50 million rands worth. In last year we sold nothing, And in this year, we'd have twice the volume to sell. But as you mentioned, the carbon credit prices have fallen quite considerably due to, I think, mainly the turmoil in Europe. But we'll have to see what happens after all the talks in Durban as to whether that changes the prices.
Absolutely. With regards to the dividend, we know that you are going to review it quite extensively because you've seen a very strong period coming through. You're also expecting quite a big impact, so we've mentioned, on your new plant that is set to come onto board next year. The dividend, 100 cents per share is what you declared. Do you plan to increase this extensively?
Well, I think that's an interim dividend, and certainly at the end of the year we would be looking to pay a final dividend. I think the guidance we've always given is some 3.5 times dividend cover, and we'll be certainly working towards that.
The macro environment for the second half of the year, do you expect it to be intact going forward? Commodity prices are starting to come off quite a bit. Are you concerned about prospects going forward within the resource space?
Look, I think the prices are coming down, but I think that in terms of our products and the volumes that we supply to mines, no, we're not expecting much of a change there. And I think going ahead with a weaker rand as we see it today, it will certainly be very good not only for us but also for our customers.